Welcome back. You're tuned into CNBC-TV18 on this very special coverage at Muhurat Trading 2082. Well, everyone's been talking about this lackluster performance of the Indian markets in the last few years. The big question is, could the tide finally be turning for the Indian markets? And I think probably yes. I'm just going to put out 4 big points. Nifty has underperformed. We all know about that. But that could be setting the stage in itself. Now, if you just look at the numbers, Nifty has clocked the second worst performing year in the last 5. If you compare it in dollar terms to the other performing markets as well, the underperformance is quite stark. And while the United States has been driven by mega cap tech as well as AI mania, India's relative lag creates an interesting setup out here. So that's point number 1. Basically, we have underperformed. And when everyone's chasing the same trade abroad, sometimes the best opportunities could actually be back home. So that's point number 1. India's underperformed in the past year. That could be the first setup. Next up, AI. From FOMO to JOMO. That could be another play, right? Because everyone's been saying India has actually missed out with regard to that AI trade. And in the United States, AI has driven close to around 80% of the stock market gains in the past year. Corporate AI spending now accounts for around 40% of the GDP growth. And NVIDIA now makes up close to around 8% of the S&P 500, which is the highest ever for a single stock. Its market cap, by the way, is equivalent to close to around 15% of the US GDP. Now, for India, sitting out of the AI mania may actually be the JOMO moment or the joy of missing out, because capital often seeks new opportunities when trades get a little bit too crowded. So maybe missing out on AI mania could now be a positive since it got overcrowded. Just maybe. Point number 2. Point number 3. FII flows. Now, there are signs of them pivoting, right? Over the last few weeks, the selling from foreign institutional investors, that's turned a little bit. In fact, in the last 4 sessions, they've turned buyers. So they have a year for Diwali, actually. And on the derivative side as well, the short positioning, well, it's eased down from around 94% to around 82% or thereabouts. That's point number 3 with regard to the FI positioning. And finally, Nifty versus gold. Yes, gold has done very, very well in the last 1 year. But can Nifty outperform from here? Probably yes. If you look at the Nifty to gold ratio, that's sub 2.2. And normally that's a level when, in fact, things normally turn in favor of the Indian equity markets. That's at least what history suggests. So maybe, guys, it's too early to get excited. But at least it appears, just going by some of these factors, that risk-reward could be turning in favor of the Indian markets. And I hope so.
Absolutely, Nigel, and I think good points, right? I mean, in one place.